All right, welcome everyone to Daily Mortgage Rates Live with the Mortgage Calculator. Like we do every morning, we'll wait just a couple of minutes to get started here, give everybody a chance to jump on, and give us a chance to go live on all the different platforms. Hope everyone is having a good week so far. We do have the chat up on the screen, so feel free to drop a comment there as you tune in. Good morning to everybody who was already dropping comments in there. Mercedes, Adam, Nick, Samantha, Matthew. Shout out to the Mortgage Calculator team tuning in. We will get started here in just a few minutes. Hope everyone's been having a great week. It's a perfect week to close some loans. And we'll get into it shortly here. All right, I see Mark, Melvin, everybody dropping comments. For those that just tuned in, we're just waiting a second here to get started. All right, looks like we are good to go. We can go ahead and get into it. We'll go ahead and take the chat off the screen. We will get started. All right, welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do here every morning on this show is go through the live mortgage rates for different programs and then do a deep dive into a different subject every day. And today's subject is going to be one-time closed construction loans. So Jose will get into that here shortly in our deep dive. But before we do that, just like we do every morning, Nick, let's go ahead and pull up our pricing tool and see what the rates look like today.
All right, switch my screen and we'll get into it. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers, and we can do primary second homes in 22 states, and we can do our investor business purpose loans in 44 different states. So if you'd like a full breakdown of a full loan estimate, please get with one of our teammates. Our pricing tool will show our general rates and programs and our APR, so it will show the full price, but not a full breakdown here. And we're going to go through our demo of a couple different rates here. Today is the 16th of May, just after 11 a.m. So all of our standard programs are live. So we're going to set up a standard scenario, 400,000 loan amount. We're going to set the LTV to 80% loan to value, 20% down payment for all of our demos. We're going to set the desired price to 99. That means we're going to tell the computer to find the best rate at one discount point in cost, which is typically what the customers are asking for on the average request. And we're going to compare our conforming conventional to our FHA, and then we'll check out our expanded guidelines, aka non-QM, where we can do over 5,000 additional loan programs beyond what you typically see under conforming and FHA. And then we also have VA available for our eligible veterans, but since not everybody is an eligible veteran, we don't do that live. But if you are, we appreciate your service. We'd be happy to quote that up. And same with USDA, that's only for properties in an eligible area. Since not everybody's looking in a USDA eligible area, we don't do that live. But if you are, we'll be happy to quote that for you as well. So we'll start with conforming conventional standard loan. We'll set up a standard scenario, purchase, 30-year fixed loan, primary occupancy, single family home, one unit, state of Florida, county of Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with these basic settings, let's check out our conventional rates this morning. Well, it looks like the same as it was yesterday, pretty much. So we have a 6.625 rate for 0.875 discount points and costs. and a final APR of 6.797. So a little bit higher than it was last week, but definitely not what it was a couple months ago. So definitely some good options here. So if we're going to compare our other loan programs, remember we're always going to compare our APR, which has all the costs in here, so we can compare apples to apples across different programs. So if for any reason our customer doesn't qualify for a conventional or wants to check out our other options, we typically go to FHA next, where we can compare across APR. So we'll set up the same exact scenario, 80% loan to value, 20% down payment. This time we'll set to FHA, so we can compare FHA programs that do allow a little more leniency on the credit and debt to income, but we'll keep everything else the exact same, so we can compare our FHA rates directly to the conventional. And we see here the best option. Let me scroll down. Oh, yep, there's a little option here, 6.0 rate for 0.875 discount points and costs, and a final APR of 6.598, so just under 6.6 APR. So just a little bit cheaper in this scenario, taking all the costs into consideration, including FHA has upfront mortgage insurance and yearly mortgage insurance. This FHA program is actually a little bit cheaper in this scenario. So our customers that do qualify for both, definitely recommend to have our team quote you on both options side by side so you can compare. With some recent changes, sometimes FHA might be a little bit cheaper for some borrowers. Now, if for any reason our borrower doesn't qualify for conventional or FHA, that's where, if we set up the same scenario, many other banks and lenders don't have other options. But fortunately, here at the Mortgage Calculator, that's really what we specialize in, are our expanded guidelines, aka non-QM programs, where we can use alternative income documentation and have programs outside of the standard FHA and conventional programs. So if we keep everything else the same, we'll see the new option that pops up for our non-QM programs is an income verification option. So scroll down. Full doc is what we use for conventional and FHA. That's 2 years of tax returns, what most people are used to. So we would typically choose this option in order to select one of the alternatives here, such as asset-related programs that we have. Business bank statement programs are popular. We have our investor programs just for investment properties, which we'll go over in a minute. We have personal bank statements, which is our most popular program by far. So that's what we'll use for our demo. But we also have RSUs, VOEs, 1099, P&L, all kinds of different ways that we can analyze income. But our most popular option is our personal bank statement 12-month option. That's going to be for our self-employed borrowers. Many times our self-employed borrowers with 2 years of tax returns have various write-offs or have other reasons where they can't qualify. So to make it simple, we simply use their last 12 months of bank statements to determine their debt to income ratio using their actual cash in the bank statements rather than their tax returns. So most of our self-employed borrowers, when they're either not able to qualify or can't qualify for enough home under the 2-year tax return guidelines of conventional, we can typically qualify them where they want to qualify or qualify them for much more income in most cases and get that home of their dreams. So these are great solutions for our borrowers who might need a little bit of extra help, especially our self-employed. So let's go ahead and check out our bank statement rates this morning. So these are obviously a little bit higher always. These are alternative programs, but very comparable here. So the best option the computer finds is a 7.125 rate for 0.875 discount points and costs and a final APR of 7.201. So remember the conventional was 6.7 something. The FHA was 6.6 or just under 6.6. Now we're at 7.2. So all these programs are very comparable for this scenario. Definitely recommend if you're out there shopping, check out all these different options. The bank statement option that we're showing here may be the right one for you. Now, there are tons of different versions of this. If you see me scroll down, there's dozens and dozens of different versions of these programs. Please get with our team. They'll navigate which one of these works best for you. Some of these may allow other loopholes, such as recent foreclosure or bankruptcy and other credit type events. But obviously, those would be the ones with a little bit higher rates. So please get with our team. They can navigate the hundreds of options here. Now, before we go into the topic for today, we always want to do some live pricing on investment properties. So we love to work with investors here at the Mortgage Calculator, whether they're a first-time investor or a seasoned investor. We have some great options. So we'll set up the same scenario, 80% loan to value, 20% down payment. we're going to compare our conforming conventional investment property rates with our expanded guidelines, aka non-QM. Remember, FHA via USDA do not work for investment properties, so we'll simply compare these two options. So we'll set up a conventional first, keep everything else the same it was before. The only change we made was the occupancy is now investment property. So let's check out our investment property rates this morning. About the same as it was yesterday, it seems. A 7.125 rate for 3.5 discount points and costs, and a final APR of 7.385. So for investment properties, the conventional loan programs have added additional penalties, so the program is not able to find a 1 discount point cost option. So many of our investors that qualify for conventional definitely want to find other options for lower discount points because this is a lot of cash. So we typically get asked to have alternative options. That's where we love to present our non-QM options that are very comparable. So for an option with less discount points and a little bit higher rate, most of our investors are okay with that as long as the property cash flows. So we'll do our last live demo here, set up a 80% loan to value, investment property again, and we'll select expanded guidelines, aka non-QM here. Now, the first thing we need to pick is our income option. And the most popular option for an investment property by far is going to be our DSCR option. That stands for debt service coverage ratio. And what that is a measurement of the actual rental income from the property. So these programs require no employment, no income from the borrower. We're simply going to estimate the rental income from the property we're purchasing. So if the estimated rents can cover the expenses of the mortgage, the PITIA of the mortgage we're paying, that is a DSCR ratio of 1.00 or higher, aka the property cash flows or breaks even on a monthly basis. If the property doesn't quite cash flow, that is a ratio under 1. Maybe the rents don't quite cover the monthly expenses. We still have options for that. So for our live demo today, we'll always leave this blank so we can see all our options, but we do have hundreds of different variations of this program at all different DSCR values. Now, the final thing to select for a non-QM investment property is a prepayment penalty. That is pretty standard. We always select 3 years. That is the standard. However, if a borrower wants to select 0, that is an option. It will cost more and limit the amount of loan programs. And same thing with a 5-year. Not all loan programs allow a 5-year, but it does save money when they are available. To show the most loan programs that we can here, to give the best examples, we'll always choose 3-year prepayment penalty as the standard. So with these basic settings, let's check out our DSCR rates this morning. Very comparable to conventional here. And you see here, it solves our investor's problem of less discount points. So the first option that pops up, 7.375 rate, amazing rate for 0.975 discount points. So we solved the problem of less discount points and a final APR of 7.455. So just very comparable, just a touch higher than the conventional rates. Definitely recommend all of our borrowers out there shopping for investment properties consider a DSCR, a much more investor-specific loan, no income, no employment. Our investors can start 1, 2, 5, 10 loans at a time to refinance multiple investment properties, purchase more investment properties. So very flexible program here. And as you see, as we scroll down, there's tons of different options with different DSCR ratios that we can find, with different prepayment penalty structures we can find. Some of these may allow short-term rental incomes. Some of these may allow credit events. So please get with our team. We have hundreds of different DSCR options that will fit for our investors. So now let me go ahead and switch my screen back over and we'll get into today's deep dive topic. So for those of you that joined us earlier, our topic for today, going back to the primary world, right, of a primary conventional loan, we're going to talk about one-time close construction, where we can actually build a property from scratch, essentially buying land and building a spec home as a one-time close loan. So these are very unique, very cool products. Jose will talk a little bit about why we would use them and what they're really specialized for. And we'll also have some live rate demos that he was pulling down a little bit earlier while we were getting started. So if you're ready, Jose, you you can go ahead and take it over for us. Did Jose get frozen on us?
Looks like he did. All right. Well, why don't you go into the explanation of it, Nick, more so, and then we can... Oh, Jose,
I see him getting unstuck. Yeah, hold on. I think he's getting back.
Oh, you're muted, Jose.
Yes, sorry about that. Little internet snafu here. All right. So let's get into this because one-time close is a little bit of confusion with renovation loans, right? And also with the fact that one-time close loans are for primary or second homes only, depending on the loan type that you're doing, right? I will make a quick discerning between the two, right? So one-time close, primary, second home only, ground up construction is for investment properties, spec homes, right? Not a home that you're building as your primary or your second home. And in some cases, obviously primary only, depending on the loan type, which I'm going to show you shortly. So one-time close, as the name states, is because the biggest advantage of it is that there is only one loan. So that results in a lot better planning. You know what your interest rate is going to be from the beginning. You don't have to have two closings. You don't have to spend extra money on two closings. And what if now the rates are 6%, and by the time you were to close your construction loan and you're going to go to your end loan, if you were not using the one-time close product, you could have 8 or 9% rate. So the one-time close definitely has multiple benefits, right? Allows you to plan better because you can already set your payment, set your interest rate, only one closing, as the name depicts, save on closing costs, a lot of benefits. And on top of that, all of the different program options that you can do with the one-time close. We can basically do any agency loan one-time close. So I'm going to go now to the first example for the FHA one-time close. At a 96.5% LTV, which is the maximum FHA one-time close situation. Now, this is for a 12-month term, right? FHA is a little bit more restrictive than the other agency partners. So the 12-month term does have a little bit higher interest rate. But, you have 9.125 at a cost of $4,909, which is roughly 1 point for our $482,500 loan and our $500,000 purchase. And you can buy that down all the way to an 8% rate at just a little bit below 3 points total cost. So this is the FHA 96.5%. one-time close option. Now we have our conventional, yes, you can do one-time close at a 95% LTV, obviously assuming you meet all of the other requirements. So you can see now that the rate is better than the FHA option. You're looking at 8.375%, right? That is costing you about a half a point. And you can buy that down all the way to 7%, and that should be 2.875 points there at a 7% rate. Now, yes, these rates are a little bit higher than your standard rates, but keep in mind, this is set from the beginning. This rate is set from the moment that this is a construction loan. So in essence, if you have a 12-month term, they are basically locked your loan in for 12 months. So, obviously there has to be a little bit built into the rate for that and for the extra risk that's associated with the one-time close, because as is the case, every now and then one of these does not close because they may have cost overruns, whatever it may be, contractor absconds with the funds, who knows what it would be, but that is the risk with this loan program. Now, here, a little bit more outside the box, but you can do a second home conventional one-time close. Now, it is at a 75% LTV because Fannie and Freddie have put loan level price adjustments for second homes. It's pretty high. I mean, when I was running the scenario at a 90% LTV, which is theoretically the max that agency can go on a second home, it was a 4.75 point adjustment. Took me way out of scope. Even at an 85 and at an 80%, the adjustment was so high that it took my loan compliance out of scope. The highest LTV that I could get a compliant rate at was 75% LTV. So it's 8.375, has a cost of 2.375, and you can buy that down to 8% rate for your one-time close second home. So now a couple of real interesting twists here. VA, 100% LTV one-time close. Amazing option here. 6.75% is your lowest cost option. And you can buy that down all the way to 5.875 at a cost of a little bit over 2 points. Now, you all know the difficulty we're having right now in a lot of the markets when you're trying to buy to purchase a home with a high LTV loan and you have multiple offers. Sometimes that presents a challenge. Again, the one-time close is an amazing option where you may have the frustrated buyer. Oh man, I've been looking for 2 years and I keep getting beat out by cash offers or 30% down offers. So then why not then have them buy the land and build the home with the same loan? I forgot to mention the one-time close can be used for the land purchase. If you have everything in order, approved plans are required to be able to close on the one-time close loan, then you would be in business. A lot easier to find a piece of land usually to get the contract than it is on the home. And you can do 100% LTV, and just think of the equity that the borrower will have if they are building their own home brand new by the time that they are done. That's guaranteed to have some equity there. And to close out our 100% LTV options, USDA, the one-time close, amazing option here for a $500,000 purchase, $500,000 loan. 6.75% is our lowest cost option, and you can buy it all the way down to 5.875 at a cost of 2 points. Now, in those USDA areas, land is definitely plentiful. So if your borrower has not been able to land that USDA financed purchase deal, well, then I'm sure that they can find a piece of land that's in a USDA applicable area and then use the USDA one-time close. But again, I do remind you to be able to put the one-time close together and to be able to do your initial closing, right? You need to have approved plans and you need to have the contractor already in place, right? That's because in this type of transaction, we have to vet 3 components. We have to vet the borrower's credit and income. We have to vet the contractor, and we have to vet the build. So all of that is going to review a nice detailed itemization of the cost of the build. We review all of the contractor experience and credentials, and of course, credit and income parameters of the borrower.
All right. I don't see any questions, so I think we are good to go. Definitely great program, as Jose said, opens up options for your borrowers, right? Especially those that have been looking for a while. So let's go ahead and wrap it up. Appreciate everybody tuning in. If you want to get with one of our loan officers to navigate this one-time close construction process, you can visit us at themortgagecalculator.com, and we can pair you up with one of our 320 loan officers all across the country. We do this show at 11 a.m. Eastern every single weekday, where we go through the rates and do a deep dive into a different topic like we did with the one-time close construction loan today. So definitely tune in daily Thank you, Nick. Thank you, Jose. Thank you, everyone, for watching, and we will see you tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day.
Thanks, everybody.